There's currently about only 12% of the circulating supply of Bitcoin on centralized exchanges.
Yeah.
And when I talk to the OTC desks, there's just reason why we went into crypto assets was over the years. I was looking at kind of the exponential returns, and it was just outperforming every other financial assets. And kind of given the long-term duration outlook of a typical family office, with the network effects, as with more time, there's going to be more network effects, and Reed's law coming into play. So it was kind of the perfect asset for us to venture into. I think no one would argue that we're kind of looking at entering into a recession. But even within the crypto space, what you can do is outside from your long-term holdings, you can be kind of on the side in stable coins. And in these kind of choppy markets, I think one of the things you could do is try to get yield on your stable coins. That's risk off. For example, you could the most simple thing is you can do is use your stable coins to buy US Terra, which is an algorithmic backed stable coin within the Terra ecosystem, and stake that in Anchor, a protocol called Anchor, and get 18% return on a stable coin. And that's kind of more on the safer end of the risk spectrum of how you can be on the sidelines until you get more clarity of and visibility in terms of where the macro market is going. Another thing you could do is, if you're comfortable playing it, is since we've been range bound in terms of the Bitcoin price, if you have kind of a view in terms of the lows and the highs, is to sell covered calls on your BTC or ETH, or even SOL, which has enough liquidity. Or if you're going to be a perpetual buyer of Bitcoin and ETH, like Michael Saylor is to sell put. If you don't feel comfortable expressing a specific view in terms of looking at the order book and figuring out how long you want to play, 2 weeks, a month, 2 months, 3 months, you could go into actually a DEX. And what's popular now is kind of these option vaults that pool these funds from different investors together. And so that's kind of a more, I guess, an easier way of playing the options market and getting some yield for your assets. Sure. I mean, Bitcoin and ETH. There are times when things are scary. It's at a correlation of 1. But I think as we kind of zoom out and go to a medium-term, longer timeline, we detangle it. There's less of a correlation. In terms of the Bitcoin bottoming out, I think this pretty much, barring another, unless Putin decides to detonate a small tactical nuke in Ukraine, I don't see another black swan event that would bring us down to kind of the lower 30,000s that most bears have been claiming. I think that we might like a short wick or two, but my personal view is that it's very well defended, this bottom that we have right now. Mm-hmm. The biggest catalyst for the whole ecosystem would be the ETH merge that's slated to happen. I mean, according to the latest Ethereum core developer call, they've kind of declined to delay the difficulty bomb. So probably sometime in September would be an educated guess. But those core developers are very conservative. They want to get this right. I think the ETH merge would be a huge catalyst, because the reason why I say that is the proactive capital has been able to kind of value the price of ETH, because post merge, as you know, when Ethereum goes from a proof of work to a proof of stake protocol, once you stake the ETH, you basically become, if you look at it in terms of an equity lens, it becomes a stock with a dividend yield. Currently, if you stake the ETH yourself, you're getting about 5%.
Yes.
If you stake the ETH through a service like Lido or through a centralized exchange, they take about 1%, so you're basically getting 4%. So you can look at it as post-merge ETH as a stock with a dividend yield, or it could be a convertible bond. It'll be basically the world's greatest bond, because post-merge, if you run the numbers, that staking yield, which is not paid out in dollars, which is in a debasing fiat currency, it's paid out in ETH. That could conceivably go up anywhere between 10 to 15, 16%. And if you do a discounted cash flow analysis, it's very simple to do, then that tells you, on a conservative basis, just taking a very conservative, PE multiple, it's right now, ETH is at about $2,830 as we speak. If you do a DCF, we're looking at basically a $10,000 ETH with no terminal value assigned. So that kind of tells you how undervalued this is. The second one that we're seeing in Asia a lot, starting with Asia, is the corporate treasurers of these major firms are starting to try to get yields on their short-term working capital loans using DeFi protocol. Instead of getting the low 1 or 2% from their banks, they're going for the they're aiming for the 8 to 12% yield they can get on DeFi. And once they get comfortable using those protocols, word spreads around, and so that could the adoption of DeFi amongst corporate treasurers, starting out in Asia, going to North America, potentially Europe, that could be a big catalyst in terms of new liquidity being provided into the crypto space. The spot Bitcoin ETF in the US, people are pessimistic that it's going to happen under the Gensler administration, but
yes,
you never I think if it does happen, it'll be because of political pressure. Again, that'll provide a great on-ramp for people. Liquidity of Bitcoin. The last chart that I saw in Glassnode was that there's currently about only 12% of the circulating supply of Bitcoin on centralized exchanges.
Yeah.
And when I talk to the OTC desks, there's just not enough liquidity. So what's happening is a lot of the institutions, they're buying it and then taking it off and then putting it to cold storage. So in terms of a supply shock, I think that could be coming towards the latter half of this year. It was kind of the unforeseen use cases like NFTs, but I think if we go out 6 months, maybe towards the early next year, that's when kind of the development for the kind of AAA rated, AAA equivalent crypto games are starting to kind of come online and gain traction and bring kind of the users into this ecosystem. Then we'll probably have a few blockbuster crypto blockchain-based games that's coming online. That'll bring new users into the space. I think the easiest thing is, if you already have crypto, is to go to your exchange, because most of the exchanges are starting to offer that staking service, and obviously you have to pay them. I think I've seen on average about 1% fee. Some exchanges actually give you a synthetic ETH, so that while it's being staked, you can do you can kind of get liquidity for your staked ETH. If you don't want to go the centralized exchange route, then you could go into a staking service, like I said, like Lido, which is the biggest ETH staking service as of now, and stake it through there. You'd have to pay, I think, around 1%, but I think they give you kind of a synthetic ETH that you can use and do other have uses for that.
Right. So when can we see 10,000 ETH? Is it this year, next year, 5 years?
Well, I mean, that's really hard to say. I don't think anybody knows for sure.
Right.
But what I do know is that post-merge, when the reactive capital kind of looks at the yields that staked ETH brings,
Yeah.
then they're start. I mean, you could see kind of a mini FOMO into that,
Right.
Because what kind of non-fiat based asset is going to give you north of 10% yields.
Like you predicted $10,000 Ethereum. If you were to assign a fair value for Bitcoin, what are the macro drivers for that value?
I mean, for Bitcoin, I'd say it. One, we kind of decouple, and we have more visibility and clarity in terms of where the whole world economy is going at a macro level.
Okay.
Maybe this time, because you remember last year, David, every pundit, every expert was saying, oh yeah, by year end, we're going to see 100K Bitcoin, right? But
yeah,
it didn't
that's
happen.
right. Yeah.
It didn't happen, Plan B model, stock to flow, all of that, right? And then we're kind of down to where we were. Year on year, we really didn't have much in terms of price action. But I think at a general level, as more money from all different sectors of the world economy flows into crypto, then obviously Bitcoin is kind of the sun in terms of the whole ecosystem. So that would be a positive catalyst, because all the major institutions, when they're constructing their portfolio, they start with Bitcoin. So Bitcoin will be the receiver of all those capitals flowing into the ecosystem.